Good afternoon. This is Brian Shannon from Alpha Trends Blogspot. Today is Tuesday, the 9th of October, 2007, and the market's closed, and we have another record high for the S&P 500. The Spiders finished with a gain of $1.38. That's just about 0.9%. And you can see here, after yesterday's low volume pullback, we did have a little bit of increased volume in today's rally, although it is still notably below the 20-day moving average of volume, and the volume on this whole rally has been light, and that confuses a lot of people. But what you have to remember is that typically lower volume rallies don't hold up, but it's a complete waste of time right now putting any analysis into that, because it's obviously not a reason to sell short, and it's not a reason to sell your long positions. The only thing that pays is price, so that's what we really have to pay attention to. The market, like I said, is again at all-time highs here for the S&P 500. We've got this trend line in the on the 10-minute time frame that has been holding. Yesterday I warned that the more times it's tested, like any type of support, the more likely it is to fail to hold. It looked like maybe that was going to happen today, but the market came down, touched that trend line, and then just screamed higher in the afternoon. So buyers still in control here. I think that best support, most important support near term rather, is probably at about 154.70 or so. Continue to keep an eye on that area, but there's nothing suggesting that there's anything to be concerned about here. But as with a lot of times in the market, when there's no reason for concern, that's when a lot of times you see a surprise. So we have to, of course, always be aware that there is always risk in the market, but right now the risk is being short. So we've got earnings that are starting to come out. That's going to be very important for this market. And these levels that I'm drawing in right now, if we do have negative reactions, will provide hopefully the first levels where the brakes get hit on the downside as far as support goes. So let's see if the fundamentals can catch up to the technicals, because the market, news and surprises tend to follow the direction of the trend. So we've clearly got a great rally going here as it continues to move and higher, and we want to give the benefit of the doubt to the buyers as long as it remains above this rising 5-day moving average. Don't fall into selling stock shorts because you think they're up too much or whatever other justification you might have. The SMH continues to be just stuck in this range, 37.80 to 39.10, and we had that support level tested once again here in the morning, or mid-afternoon rather, but it did bounce strongly from there. We do have a declining 5-day moving average on the 10-minute time frame, so that means just basically trade something other than semiconductors. This is a complete waste of time. There's so many good stocks rallying that why bother with the semiconductors is the way I view it. Go where the action is, and it continues to be in a lot of those Chinese stocks. The IWM had another good day as well, as it's approaching these all-time highs in here, and it just seems like it's, like I said yesterday, it's within striking distance of these all-time highs. The market has been stair-stepping nicely higher. These levels will be important as far as where there's likely to be support if we do see some pullback in the short term. Yesterday we saw that the uptrend line was broken, but that, again, breaking a trend line doesn't mean that we're due for a reversal. It means that maybe there's a slowdown. It means there's room for concern. But this level here, 83.30, let's call it, that's going to be our more important level of short-term support. And then just below that at about 82.80 or so. And then we've got really about about $82 a share as far as potential support levels go for the IWM. The NASDAQ 100 just seems to want to make a new high every day in here. Again, it's not all-time highs, of course, but multi-year highs. And these trends can continue for a lot longer than people expect them to. It doesn't mean that you ought to just go in and buy everything blindly, but wait for the low-risk entries and set your stops and let the market do the work from there. What we have to do is just manage risk. And the longer this rally continues up uninterrupted, the greater any negative surprise will be, meaning that the greater the impact of any negative surprise will be, although it's likely to be short-lived. That is, if we get some kind of sharp and sudden unexpected sell-off. We have 52.15 is this old high in here. We do have a rising 5-day moving average, and this trend is getting more extended each day. But as long as this pattern of higher highs and higher lows continues on the short-term time frame, stay long your good stocks, and make sure you've got a strategy in mind for locking in the gains.